Cool. Quick little rundown on gold. If I remove the drawings, so basically this is the monthly chart. So I'm just gonna do like my top down analysis. So yeah, so this is my monthly chart. Straight away you can notice that we're basically at all-time high territory. So the all-time high was here, reached that in 2020, and the market's just been kind of consolidating or in a little bearish trend since. So if I add my drawings back, so I've just noted the liquidity that's been rated above all-time highs. And also let me zoom into the last month's high, and let me talk about why it's important to note your monthly highs and monthly lows and weekly highs and weekly lows. So this is last month's candle, quite a mad candle to be honest, but yeah, you can see this is last month's high and this is last month's low, and we've been in a bearish trend since August 2020. Yeah, so if I add back my drawings, I've marked those levels, the monthly high, monthly low. So this is the monthly high and I've marked the monthly low here. Yeah, monthly high, monthly low. So you can see, can you see how it kind of, you'll see it on the lower time frames, but you can see how it's stabbed above last month's high. So if I break down, and these trades are easy to catch, fam. If you catch, and they usually happen early in the month. So let me go down to the weekly. Basically what I've done with the weekly as well is, if I remove the drawings again, I've again marked last week's high, which is this candle here, and the last week's low. Okay, so, and there's some liquidity here, that some equal lows. These are equal lows that haven't been rated. It looks like it's been rated here, but it didn't quite get below these lows. But for a lot of brokers, because the spread on brokers are different here, so for a lot of brokers, their chart may show that those lows were rated, but the chart that I'm using, these equal lows weren't rated. Okay, so I've marked this liquidity here at the equal lows as well. So yeah, going back to last month's high, which is this level here, you can see basically, okay, wait, what? Yeah, so last month's high was August, right? So yeah, in this week, you can see how it's stabbed above. It doesn't even need to move a lot. How it just stabbed above last month's high, and it's rejected. Yeah. So basically, what I'm expecting is it to return back to these lows, because we're in a bearish market, and there's a lot of liquidity below these. Especially when you see long wicks like this, there's a lot of liquidity lying below these. So yeah, now that I've marked my weekly low and weekly high, this is this week that just started now. You can see how it's stabbed above last week's low, and it's rejected it. And this little movement here is really all you need for a week. You could catch it, especially with a gold pair, with gold. You could catch a lot of pips just off this little movement here, and it's easy, literally. If I drop down, all right, let me go back to the daily. So now that I'm expecting the market to return to these lows, so I'm looking for levels to short basically. So yeah, so now that I've noted my weekly high, let me just change the name of this. Weekly high. All right, so now that I've noted that, so this is today's candle. It's stabbed below last week's low, and now it's rejected. So I'm expecting it to come to this order block here, or I'm expecting it to come to around 50% of the weekly range basically. So if I draw the 50%, you'll see how it comes nicely to the order block as well. So this might be all confusing, but I'm just doing a quick rundown in it. So if you're confused, just ask questions in it. But yeah, with the weekly, if you're in a bear market and you're expecting this week to also be bearish, then draw a fib from the weekly range, and then look at your levels, your retracement levels. So yeah, these are my retracement levels. You know, it lines basically perfectly with my order block. So I'll just get rid of that and I'll leave my order block. So yeah, I'm literally looking. If you was up early enough, you could have even I could have even caught this long, but this long happened quite early, around 2 a.m. But yeah, this is the 4-hour chart. You know how can you see how it just stabbed last week's low, and it's rejected. So now I'm looking for shorts in this area here. So I'm looking the market to come up to this level here, and then even if you want to enter a short right now, you know, it's still a good risk reward. If you put your stop, you know, just below the low, you know, you could catch a, you know, 2R or something like that. So yeah, but I'm not gonna enter. I need to get below last week's low. But yeah, so I'm looking for shorts this week. I'm looking for shorts in this area here. So I'm gonna look for raids on liquidity in this area here, a change in market structure, and then a return to a liquidity pool. And then so it will look something like this. Okay, my drawing. What is it? So it's gonna look something like this. So the market's gonna come up, create an engineered high, you know, fake high, raid the high, break market structure, return to the LP, and then drop down. So that's kind of what I'm looking for this week. So yeah, I hope that helps you with gold. And yeah, just let me know if you have any questions, bro.